for joining us. Happy Friday to you. I'm Marlon Bowling with you, and I'm your tour guide to the ag commodities. A special shout out to everybody that I had a chance to visit with at that National Farm Machinery Show in Louisville. Man, that was fun. And thanks for all the kind comments out there. It was a pleasure to get to meet each and every one of you. Well, let's take a look at our market setup for today. USDA says we had another overnight export sale to mention this time, and wouldn't you know, it's another sale of soybeans. It's 198,000 tons of soybeans. Who bought it? Who knows? It's unknown destinations again. Now, they split this one up too. The total is 66,000 tons for delivery during the current marketing year, and that works out to be exactly one cargo load. And 132,000 tons is marked for next marketing year. So that would be a year out from now, and that would be 2 boatloads. The mystery remains. Who bought it? We have a suspicion, but can't say who just yet. Well, anyway, that was a nice surprise here this morning, almost 200,000 tons. Let's see what the market did overnight. Tammy alluded to it earlier, where we had kind of a mixed affair in the overnight session. Corn ended up with the March unchanged at $6.50 per bushel, and December was down 3/4 cent at $5.95 3/4, so it really didn't accomplish much in the overnight trade. Let's switch over to soybeans. These quotes provided by bar chart show the March was at $15.94 3/4. Well, that was up 2 3/4 cents. July was up a penny. That's all overnight. November new crop soybeans, well, they gained 2 1/4 cents, and they were priced at $14.63 per bushel. Now, looking at the wheat, they tried to rally back a little bit in Chicago, didn't do too much. March was a penny higher at $7.99. Of course, a lot of concern and consternation over what's going on between Russia and Ukraine these days. Kansas City wheat on the March, 4 higher at $8.27 per bushel. July was also 4 higher overnight. And Minneapolis wheat had the March 3/4 cent higher at $9.58, and July was up 2 1/2 cents. Meanwhile, in the cotton market, we ended up with the March 71 points higher at $122.64, and December new crop cotton in that battle for acres at a price of $102.60 overnight. That was 29 points higher. Time to check in with Brian Hoops, the president of Midwest Market Solutions, and chat about all this market action here. Okay, where are we now, Brian, in this battle for acres, and considering the outside factors such as geopolitical tensions and maybe input supplies, South American weather? How do you balance it all right now?
Yeah, good morning, Marlon. Yeah, we've got a 3-day weekend coming up as well. So there's a lot of factors at play. March option expiration is today for the grain markets. That's another factor that could contribute to some volatility in the markets today. If you look at this soybean sale, right now, basis levels in Brazil are skyrocketing. Farmers are holding on to their crop. They're not making a lot of sales. And when you have a tight supply, it means the basis levels in that country is increasing sharply. That leaves the U.S. to be more competitively priced. In fact, we're cheaper than what soybeans in Brazil are right now. So it makes sense for a lot of countries to come to the United States and buy our product at a cheaper price level than what they can out of Brazil. Plus, there may be some additional crop losses in Argentina and Brazil, so it makes sense that these countries, the unknown destination is in there buying not only this year, but also next year's crop. The disappointment, I think, comes in the corn market, where we really haven't seen any sales. Last week, we saw a sale, one sales all to Mexico, and this week, nothing. So it's a disappointment that the corn market not seeing better export business. The IGC came out last night, lowered their soybean production numbers, lowered their corn production numbers. That's a indication that the crop is getting smaller, not getting larger, even with some of the rains that are falling. It's hard and stabilizing. And Argentina's crop ratings last night, corn now 19% good to excellent, soybeans down to 31. So both of those markets are dropping as well. That should be supportive going into our weekend. But of course, you've got these geopolitical tensions that we've been talking about, crude oil getting pushed lower today, that market down a couple dollars. That could limit how much of advance we see in the corn market. So it could be a real tug of war during the session today. I don't know that there's going to be a lot of buying interest ahead of a 3-day weekend, but may not be a lot of, there could be some profit taking, but probably not a lot to drive this market sharply lower either.
All right, well, Brian, we'll take a break right here and we'll come back and we'll talk more about the markets. There is a lot to consider as we head into the long holiday weekend. We'll talk about it when we come back. We're back with Brian Hoops, and I want to focus now on our livestock trade. Brian, yesterday on our livestock summary, it looked like we had rather limited trade, but it seems like the prices that we have been getting out in the plains this week are generally a couple of bucks higher than what we had a week ago. Do you think the cash trade is done for this week then?
Yeah, it probably has wrapped up. It was pretty limited yesterday. Wednesday was more of a heavy day as far as buying any cash cattle. So it's it's a $1 to $2 better cash trade on a dress basis, $2 higher on a live basis. It was a strong week for cash. One of the other positives we've been watching is the weekly slaughter pace. It looks like we're going to be well over 650,000 head once again, depending upon the Saturday slaughter. So that's very positive as well, that we're killing a lot of cattle. The negative that came out as far as news yesterday was the slaughter weights increasing another couple pounds, and they're up to 930 pounds. And now that's only 1 pound below the record for this time of year. So that is a real concern, that we have these cattle that we're working through, but the weights are not coming down. In fact, they're increasing a little bit. So they're 8 pounds heavier than a year ago. And as I said, 1 pound less than the record. That's a concern for the trade, especially when we go into a shortened kill week next week with the holiday.
And if you look at our beef cutout values, we can bring those up from yesterday afternoon. USDA said on the choice cuts, they were just a little bit lower, down 3 cents is all, but they were priced at $269.59. You look out a week ago, they were priced at $274.82. So we're still running roughly about $5 behind where we were a week ago. Select cuts down $1.23 yesterday. They were priced at $264.85. On the other hand, you look at the pork cutout values, the wholesale pork trade, and they were on fire on the carcass values, over $10 higher at $116.54. The ham market, again, had a big jump, $25 higher at $98.44. And the belly market was up $4.80 yesterday, but look at where it resides. It's at $214.05 per hundredweight. And it wasn't very long ago. I remember it was more like $170. So that's getting up to some pretty lofty levels again on the bacon-related markets there. My goodness. Okay, let's review where we finished yesterday on live cattle. Let's go to the big board here, and we were mainly lower. April down 15 cents on the close. We were at 146.77 at that point. On the feeder cattle market yesterday, we wrapped up with a March down $1.25 at 166.20. April down $1.02 at 171.15. We'll see if we have follow-through selling today or not. And hogs, well, they continue to tread at new contract highs. April got as high as 108.07 yesterday, but it settled at 107.57, and that was up $2.17. We'll see if they can do it again today or not. Brian, great to talk with you again. Thank you for the help, and I hope you have a good weekend there, sir. Appreciate it. Brian Hoops, Midwest Market Solutions. Tammy, we're about ready to rock and roll here.